Hello everyone, welcome to the live stream. I'm James and welcome to the stream. We start in 6 minutes time. I'll see you on the flip side. If you can hear me well, good day to you, David Morell from Cumberland, Rhode Island. So David, maybe you can help out. If you can hear me clearly, just type up a Y or a yes or a thank you. That would be great. Okay, looking good. Hello, Denise. Welcome to you. JG, lovely to see you. David, thank you for your reply. Hi, NK. Nice to see you. And JG, which fine school did you go to in the UK? JG, I was born in London and I went to school in Bourne End. I don't know if you know where that is. It's kind of near Croydon, south. And yeah, so I was born in Chalk Farm, which is kind of central London almost. And I went to school there only until about 12 years old, and then I moved away from England. And I'm pretty pleased that I did, I have to say. Good morning, Jamie. And Macauzi, good morning. Denise, natural gas looks like it's bouncing back from the 50 EMA. What do I think? Thank you, Denise. I'll get to that question later. Folks, what I would like to do today, as far as possible, and if we don't get enough questions, it won't work, but I'd like to answer your questions rather than tell you what I think. I'd like to know what you want to know about. So it would be great if you could type up your questions right now in the chat box, and I'll get to them sequentially one by one if I can. And in that way, whatever reason you had to come to this live stream may be filled or fulfilled. So put your questions up, ask me whatever you want to ask, and I'll try and answer it as best as I can. And also, whilst you're here and whilst you're busy with that, please subscribe to the channel. There's a subscribe button below this video, and there's a like button. I'd really appreciate it if you press those, and I'll remind you again a little bit later on. It just helps support the channel, helps the algorithms identify that this is a channel that people are interested in watching, and will promote the channel more to the internet audience or the YouTube audience. Based on those stats, including likes, subscribes, view time, watch time, comments, all that sort of thing. Hi there, Johannes, from Bavaria. Lovely to see you. Bavaria. I've been there, Johannes. Black Forest. I don't know if that's Bavaria. I think it is. Spent some time there quite a long time ago. Hi there, the Jazz. Olivier. Andreas Graf. Well, it's a surprise to see you here. One of my greatest, I'm assuming that you're not Andre Agassi married to Steffi Graf. It's just a bit of a joke. Alagu, good morning to you. And Emily Trading, good day to everyone and all, says Emily. And Marco Polo, what about wheat? We'll get to wheat shortly. So a couple of questions so far on wheat and natural gas. I'll address those when we start in a minute's time. And the deal today is if you've got a question, post it up in the chat box. I'll try and answer it, and I'll get through as many questions as I can in about 45 minutes. That's the deal. Let's get on with it. So I'm going to get to the first question, and that's about natural gas, and I'll come back to the chat later. So I'm going to delay it by about 30 seconds so that we can make sure that no one misses out. In the meantime, I'm going to switch to my natural gas chart and put it up on the screen for you. Good day, Punk Piggy. A big fan, mate. Also got to love the entire playlist. What's your opinion? Oh, you like the music playlist? Yes, folks, if you sign up below this video, there's a link where you can get hold of my music playlist as part of the Trader Survival Guide. Click on that link, you can download it, it's free. So I'm glad you enjoyed that. The opinion on gold going forward. Yeah, I'm bullish on gold. Punk Piggy. I'll have a look at gold shortly. And Jamie Bridges, monthly MACD for NatGas. Okay, sure. I don't really observe MACD and oscillators, Jamie. I completely ignore them for the most part. I don't think they have a huge amount of value, apart from identifying potential divergence between price action and momentum with the oscillator slowing down and the price continuing in the same direction. But apart from that, I don't really look at oscillators. I don't think they're very valuable, and I think most people use them incorrectly too. An overbought chart doesn't mean sell, and an oversold chart doesn't mean sell, or buy, rather. An overbought chart often means buy, and an oversold chart often means sell. All right, folks, let's get going. So the first question up, as I said, if you weren't here when I started off a few minutes ago, today I'm just going to answer your question. So please type your question up in the chat box, and I'll answer it when I get to it in the queue. And whilst you're here, please like and subscribe, press the buttons below this video, all the buttons, click on anything you can find, and that should be sufficient. Let's look at natural gas. Now, if you were following me yesterday, we had a live stream yesterday too, and I posted this up on X and my private group. We are now long on natural gas. We've got two tranches, one from down here at the original entry point. Excuse me. The original entry point was where we dropped down to the channel bottom and the support zone and the orange support block, and I tried to buy it off the bottom of the channel after several reversal candles just below the 20-period moving average, which is slightly risky because the 20-period moving average has not been overcome at this point, and therefore we're still slightly bearish, at least in the short term. However, we did have one full stop candles, a one up, one down at the trend line, at support and everything, and that's where we went long. Excuse me, I've got another frog in my throat. There's a bit of flu going around. It's bitterly cold here. I don't know what it's like in I don't know, Australia, New Zealand, in the part of the hemisphere that I'm in, but it's freezing cold here. Everyone's sick. This is natural gas. So we didn't manage to hold that line. We broke down only to the bottom of the orange block though, and we could have bought some more at the bottom here. My private group members were urging me, saying, please buy some more natural gas at the bottom, at this double bottom. Notice that the futures broke down below that previous swing low, whereas the continuous price here on Pepperstone, excuse me, which is a combination of the front month futures, the next month, and various other spot market prices and whatever else they throw into that bag. This is the natural gas Pepperstone continuous price. You can see we did not make it a low low. In fact, we made a precise double bottom to the penny. So that's a classic double bottom on natural gas. Natural gas, like all energies and gold plays, love double and triple tops and bottoms. And whenever you see them, normally they hold. It could be that we need a triple bottom, and often natural gas, oil, and gold, those are and silver perhaps, but those are the sort of main instruments that tend to like the doubles and the triples. We've got a beautiful one here on the continuous, and on the futures, which I'm currently trading. I only trade the continuous in the week before and a couple of days after the rollover, when there's a bit of faffing around with the rollover gapping and all that sort of thing, contract switch and change. So I'm trading the natural gas futures at the moment, not the continuous. We broke down below that level. That would have faked quite a lot of traders out. But look at the very next candle, a massive bullish candle right back up to the trend line and the apex of these two sort of trend lines, this triangle here. Now, my private group members wanted us to buy here again. I'm not dissing them, by the way. I love my private group members. They're fantastic. We're building a wonderful community. And I'm also getting some bespoke software made for me for my private group. So that's going to be fantastic. You'll be able to even download it on the App Store and the Play Store and all that sort of thing, the Google and Apple stores. And we'll have our own app. I'm busy having that commissioned. So, yeah, I don't know how I even got onto that, but they all know about it. And people were saying, should we be buying natural gas once we got back up to the trend line and the apex below the 20-period moving average, the green line? And I said, no, we have to wait. And so we waited 1 or 2 more candles, actually. We broke up through there and retraced back to the trend line as per normal. So there's a classic breakout pullback. If you want to know what a breakout pullback trade looks like, that's what it looks like. Let's switch to the 15-minute chart. You'll get a better view of it. So there's the breakout on the 15. Remember the red line, this line in the middle here, is the trend line that we were trading against. It's a channel line, the bottom of the channel. And having broken down there, gapped over, down through there over the weekend, trailing down to that order block at the bottom and bouncing up. And you can see how this breakout pullback works. It's the best trading setup you'll ever find in any market, on any day, at any time. The breakout pullback, if that's all you ever trade, literally all you ever trade, nothing else, you should make money from trading any market. So there's the breakout through the red line and the pullback. It's inevitable. I'd say 80% of the time you get the pullback. The time to buy is not on the breakout. Buy it at a cheaper price on the pullback. If you don't get the pullback, you don't get the trade. Fair enough. That's the risk you have to take. But in order to get the pullback trade, or when you get the pullback trade, you've actually scored, you've taken some money away from the market. Instead of getting it at the top, we got in on the pullback. Look at the 200-period moving average. We bounced off that, and we're now moving up. This is today's play. We're seeing a little bit of resistance at that previous high that we got to yesterday. And so, of course, it's going to be resistance because it was before. So people are saying, well, that's the 50-day moving average. Are we going to reject here? Well, it is the 50-day moving average. Actually, it's the 50-period moving average on the 4-hour chart. So it's about 200-hour moving average on the day chart. On the hour chart. So that's the 200-hour moving average. Also a really good number. And that's one of the reasons why I use the 50 on the 4-hour chart, because it's the same as the 200, which is a really important moving average on the 1-hour chart. So this red line on your chart, folks, is super important. The 50 on the 4-hour chart, or the 200 on the 1-hour chart. And so that's where we are. And we've broken up through there. We're testing previous resistance, the 50 SMA, and that previous top. Naturally, we're going to reject from there initially. And my hope is that we'll hold the 20-period moving average, the green line beneath us, and move up and push up through there. My target for natural gas is about $4, but I think we could get higher, and possibly up to $4.20, and further up towards the top of this channel that I've got drawn on the page. We've only broken out of this channel once, and that was, well, twice really, and that was the last 2 dips down to the bottom of that block. So I'm going to regard that as kind of one bounce through the channel, a fake break, and regard this channel as still intact, and therefore the top of the channel remains my immediate or initial target. Obviously, we've got to get through all this other stuff. First of all, $3.75, which, as you know, it's this yellow line drawn in the center just above this pink order block, and all of these red arrows where we've been selling into that resistance level previously. So that's a very, very key level, and there's an order block. We've got a couple of moving averages. There's a 4-hour chart on the futures. We've got a lot of traffic to get through, an awful lot of traffic, actually. We've got the 50, the top of the order block, the 200, the 100, this little trend line, that order block, the big 375 level. And if we can clear all of that and look to the left, look at all of that flat top breakout that we already had to get through, which took an awful amount of effort. We tried 3 times, and only on the 4th occasion did we manage to get up through there. So, very important level, 375, but I think we could target the top of the channel, and that's at about $4.26 to $4.30, something like that. So that's natural gas, folks, and that was in answer to the first question on this live stream chat. So I'm going to go through the questions today. I'm just answering questions. So if you don't put up your question, I'm not going to address your concerns or your issues or whatever you're looking at. So type up what you want to know about. I'll try and answer it as we go along. The next question was about wheat from Marco Polo. So Marco, let's look at wheat. And I'm going to go across to my futures page and pull up the wheat chart. And you can see I've got sugar, cocoa, coffee, orange juice, cotton, corn, wheat, and soybeans on this chart. And I trade all of them. But today, we'll talk about wheat because I'm answering questions only. But we do have positions short on cocoa, short on coffee, nothing on orange juice. We're long on cotton, long on corn, and we're currently long on wheat, nothing on soya. We're long on sugar, sugar doing pretty well over the last couple of days. So wheat, what's going on? Well, wheat has broken up through, or at least tried, to break out of this falling wedge pattern and succeeded, albeit for a brief amount of time, only for 2 or 3 days. This is the daily chart on wheat Forex, wheat futures. It's actually the wheat futures, but it's provided as an ETF by Pepperstone. So here we go. We've moved all the way back down inside the channel. We tried to get back up through there one more time and failed. That was a couple of days ago. My long position is from over here. Let me just make that visible. Visual order. So my long position is kind of where we are right now. I haven't added any more long positions on just yet, and I'm waiting for a break up above this channel. It's a falling wedge pattern, so it's bullish. 65% of the time we should break out through the top. We haven't done that on this next attempt, although we did it on the previous attempt. We fell back to the golden pocket, the 618 fib, the 78.6% fibs just below there. We did try to get there at one point. We've fallen down to the 618 fib, the golden pocket. It's also the rising trend line, and I guess there's probably a couple of moving averages on there too. I don't have the moving averages drawn on here, but probably you'll find that that's the 50 or 100 period moving average just underneath the price. If you're in the chat, you might want to comment on that and confirm that or deny that. But nevertheless, I don't have it on the chart, but we do have the golden pocket, the 618 fib, the rising falling wedge trend line from underneath. It's a short-term one, but we've tested it 3 times now, as you can see, into that corner. And we're being driven slowly into the corner, into the apex of this triangle. And it's quite conceivable that this will carry on for another few days, or weeks even. And I'm going to draw a squiggly sort of path like this. We might even just peek up through there, back down again. But I think we'll try and maybe a fake breakdown through that level. Great place to fake out through the apex there and then up. So that's the sort of thing I'm thinking on wheat. And as I said yesterday in yesterday's live stream, try and visualize for yourself what I've just done. It's really, really useful. If you draw these sorts of things in, and very often once you get good at it and experienced, and it's just like any other thing, like riding a bicycle, really. Once you practice and practice and practice, you'll start to be able to draw these paths in. You might draw 2 or 3 paths, alternative paths, but I generally try to go for one path which sticks to the view that I have in mind, and I observe the price action along the path that I've drawn in. If we get to this level around about 542 on the 15th of August, so that's over a month, 6 weeks away, and get down to there about 6 weeks' time, maybe down to 540, down to the 618 fib, or even down to the 78.6% fib at 525. If we did get one of those, I'll be waiting for it. I've got my idea in place, my plan, my path, my projection, my anticipation. It's not a prediction, and it's not cast in stone. It's not cast in cement. It's an idea, and if the market changes and doesn't follow that sort of path, I'll redraw my pattern. But what it does do, it puts me in position to take advantage of the market if and when it gets to those areas. I had a really good example on that on oil, and I want to show you that quickly before we move along. And we talked about this ad infinitum yesterday in the live stream. And if you look at this channel on oil, where we got short at the top there, all we did was move back to the top of the channel. And I'd posted weeks and weeks in advance when we got out of the shorts down at the bottom here. We went long. We got out of those longs somewhere in the middle here. And now we've gone short. But I said weeks ago that if the price should ever get back up to the channel line or this order block, I'll be adding a short position, guaranteed, because the market's traded within this channel for 3 years. It's not broken out. It has broken out, but it has not closed outside the channel. And you can see now we've closed outside the channel twice through the bottom, now once through the top. But hitherto, my charts have just vanished, hitherto we've not broken out of the channel. And therefore I had my order placed in there. I woke up at 1 o'clock in the morning, sold, and we made $11 profit on that move down on oil. So why I'm telling you that because, and I'm digressing horribly, I'm telling you that because on wheat, very much like I did with oil in that example, I often do this, and you'll see on my charts I've got blobs and lines going into the future where I think the price might get, or where I could put a stink bid or a stink offer. or where something might happen that was not anticipated. So that's the kind of thing I'd encourage you to do. All right, now then. I'm afraid I get a little bit excited about this subject of trading, and I get a little carried away and breathless sometimes. I do apologize. Jamie. All right, so the next question, I'm going to go through these one by one. So we talked about wheat. The next question is from Alagu, and the question is on target and wheat. So we talked about wheat already, Alagu. I'm going to talk about copper now, and this is the copper chart. We've now performed a monthly close rather, the highest ever monthly close. The end of last month, let's put the monthly chart on here quickly. Yeah, so we closed last month at precisely, let's have a look, 503, is that right? Let's call it 503, just above $5. And so that's the highest that copper's ever closed at. We've got this rising channel, and we're near the top of the channel. We haven't managed to push down through the bottom of the channel. We've got all sorts of fib and order block support beneath us. This is a monthly chart. It's nice to look at it on a long-term basis like this. You can see clearly it's bullish, and we're actually accelerating to the upside towards the right-hand side of this chart. Let's go to the week chart. Actually, let's just stay there. My projections for copper was the question, actually, which I completely neglected to answer, can be seen above. All right, so we've got a simple Fibonacci projection based on this last swing, and we've reached the 0.618% fib extension. The 78.6% extension is at $5.55. The 100% extension, in other words, equal to that move from the bottom up to the top, is $6.20. And then the 1.618 is at $8.15. My target is $6.20 for copper. That's the monthly chart. Let's have a look at the weekly chart. I'm going for the full Elliott wave, 1-to-1, C wave, bam, all right? $6.20. That would push us up through the 618 that we're at right now, through the next order block or next Fibonacci at the 78.6, all the way up to $6.20. Okay, first target, obviously the top of the channel. And if we got there in the next couple of days, so we're about 530, and then a break through the top of the channel up to 555. That's the next Fibonacci extension level. I kind of like that. I like that. I mean, we've got a good position on this. And if we start breaking and moving up higher, at some point I'll add some more to my long position. I do like to add to my winning trades as well as I like to add to my losing trades. So don't be scared to do that. But when you add to your winning trades, you have to be a little bit more cautious and careful, because you can start to pile on the top heaviness and over leveragedness as you move higher, and you don't really want that. You want most of your orders dispersed equally or clustered near the bottom of the move. And so if you start adding, don't do them in big clumps very close together. Try and spread it out so that if you start moving back, you can start taking those orders off at break even if you have to, if you haven't taken profit already. So you start adding, we're moving up, you're adding, and then it starts coming down, and you may want to take your profit or hedge or start taking those top orders off at break even, incurring no loss. You want to get a break even as quickly as possible in those. That's a good way to do it. But be very careful when you're adding on winning positions, because you can get top heavy. And I've done it myself. I know what it's like. And you suddenly realize you put way too much on, way too high up. And you end up top heavy, as I said. Top heavy things always fall down. In physics as well. All right. So gold. Have we talked about gold? I think that's the next one from Punk Piggy. The question is, where are we going on gold? Let's have a look at it. Now, gold, generally I'm bullish on gold, but I thought we could have a better pullback, a better retracement, down to at least 31.20, the bottom of this sort of range now, previous swing low, or down to the 200 period moving average and the rising trend line, the shallower trend line. We did break down through the steeper trend line at one point. We've now broken back above it, probably trapped some people there. We managed to get long. We did hedge for very brief period, but we took profit on our shorts, and we're now only long on gold. We're not short anymore. We're not hedged. So this is the way it looks. And if you look at gold on the 4-hour chart, we're holding that support. I'm not ruling out at all. And in fact, I'm half expecting it and even hoping for it, that we could get a dip down to 31.20. But I don't think we're going to. And I think this trend line may now hold, and the 50-period moving average that we're busy bouncing off. Remember I said to you before, the 50-day moving average is equivalent to the 200-hour 50-day moving average. Yeah, so I've just made a mistake. 50-day moving average times 24 hours. That's a long period on the shorter term charts. Let's forget that. But the 50-day moving average is very key. It's the important medium-term moving average. We're below the 20, but above the 50, and trapped in that sleeve between the two. How often do we see this when a market trades between the short-term moving average, the 20 SMA, and the longer term period moving average? That's the 50. I'm going to have to bring Harley up to my desk, I'm afraid. I do apologize. Give me 1 second. Harley is my rescue dog, and she's very, very upset when my wife leaves the office or the house. I'll be right back. All right, well, here's Harley. And say hello to everyone, Harley. All right. I'm hoping that she'll just calm down a little bit if she sits on my lap. So I do apologize. But that's, this life. We have families and dogs and homes, and we're all normal people. That's what normal people do, isn't it? All right, so let's talk about gold. I'll get back to gold right now. So yeah, can we hold this level? I don't know. I think we probably can, and that's why I'm long, obviously. Otherwise, I wouldn't be long. And we've also got this sort of channel that we're falling down in. Off you go, Harley. Which looks like a bull flag, really. I'm going to go to the 4-hour chart to examine that. Yeah, so this is the 4-hour chart on gold. You can see there's the big rally up through the trend line that I have drawn in there. And I've just drawn in another very short-term channel. I hope you can see it. There's our long positions, one from there in green. And we're trading above also on, finally, on the 4-hour chart. Look where we are. We're above the 50, but below the 20. And on the day chart, it's quite funny. We're above the 50, but below the 20. Super interesting. Just a coincidence. Nothing to be read into that. It's a fun thing. So there we are. A move up, breakout through the channel line. A retest, almost, not quite, but it's pretty close, right? It's not bad. So we got pretty close to the retest, breakout, pullback, rally. Very, very simple. Exactly what we were talking about earlier in the live stream. So breakout, pullback, forming a bull flag, and I'm hoping that we'll break out through the top. Now, to get through there, we've got to get through all of this traffic above us. It's not going to be easy. We've got the 200-period moving average, the 100-period moving average, the channel or bull flag top, 1 order block, 2 order blocks, 3 order blocks to get through. And even if we do that, we've still got Fibonacci levels and this previous high at, where was it? $3,500. But before we even get there, we've still got 3,450 to get through, the 78.6% fib. And then, as I pointed out, most of the traffic, most of the heavy lifting, burden, heavy work has got to be done quite soon, immediately above us, really. And that's what we've got going on. My target for gold, I don't really know. We've got blue sky. I've drawn some fib projections in, which take us up to about 3,800 or 4,200. Not only are those fib projections, but they're also the big round numbers. Not the big round numbers. They're also the 20s and the 80s, which I like very much. Often, the market will move, navigate towards, get attracted towards, magnetized towards the 80 and the 20 levels. And so I'm going for 3,800, 4,200, but I don't know how far we could go. We could go a lot higher, or we may not even get above 3.5 and have to drop all the way back down to support levels that I mentioned earlier. Now, those support levels are going to be really important, but they're very clear, which is good. So we've got super clean charts right in front of us on gold. We've got a support at 31.20. We've got a support, the most recent one, at 32.50, where we bounced. We're long at this current price. And we've got beautiful, clean, neat trend lines, order blocks, and moving averages. So we know exactly where the supports are down below us, 31.20, the 200 period moving average, and this rising trend line. And then there's a very intermediate one just below us at 32.50. If we can hold 32.50 today and this week, then I think we're going higher and eventually to a new all-time high. So that's gold. And I'm also long on silver as well at the same time. And for the first time in about 2 months, I've been long on silver and long on gold simultaneously. Up until now, for the last 2 months, we've been long silver, short gold, and we've taken profit on both of them simultaneously. Good day, Martin. Always nice to see you. I think Martin might be possibly my biggest follower, fan. I don't like fans, but let's say follower, enthusiast. So it's always lovely to see you, Martin, and I appreciate your support incredibly. Thank you very, very much. And as Martin says, we have a lot of luck with the people in our community. So I'm very pleased with everything that's going on in there. I sound like a grandpa, don't I? I'm sounding more and more like a grandpa as the days go on. I'm almost 60, but I'm adopting this role as grandpa. Some people call me Jampa. It's weird how one's sort of attitude and voice and everything changes once you get towards 60. Suddenly you're not 50-something, you're 60 and you're an old man. But I've been going to the gym and doing pretty well and surprising the gym people there. And they say I have a metabolic age of 42. So I think that's okay. Anyway, getting old, as we all do. What do I think about the yen crosses? Yeah, all right, let's get onto the yen crosses, folks. This is a bit of a bugbear, really. It's not really sort of a bugbear for me, but I don't have huge positions on this, and they are moving against me. But in the bigger context of what I've got going on in some of these other markets, it's a small, relatively small portion of my portfolio, but it is annoying, and it is moving against me. Now, let me explain what I've got going on here. I'm expecting, let me paint the broader picture. I'm expecting this to move down. This is the euro yen. I'll cover the pound yen very shortly. I'm expecting a move down equivalent to that length. We had what looked like a bear flag, which is no longer relevant. That bear flag, whilst it was there, it had every potential for this to move down to about 144 on the euro yen. But this bear flag failed, not to the downside, but to the top side. And so we've moved up to the 78.6% fib and slightly higher. And I'm watching that level today. I sold a little bit more. This is all hedged down here at the bottom on the left-hand side. These positions are all protected and hedged. My last positions were over here and over here at the 618 and the 78.6% fib. So my average price on these additions is around about 169.50, something like that. We're at 171.70 now, so about 225 pips. But remember, this is a euro yen, and a pip isn't worth as much as is on, for example, the euro pound. In fact, it's worth a whole lot less. So these are not big floating losses, but they are in terms of absolute pips. Same thing on the pound yen, and this is a very small position, and I've just added today, this morning, one more short tranche. It's a little bit premature because we've got the 78.6% fib up here and this order block and a couple of other order blocks up above us. But we have reached the top 200 period Bollinger Band, the skinny red line that you can see in your chart. That's the top 200 period Bollinger Band. Let me indicate that to you. 200 periods, simple, based on close, 2 standard deviations. So that's what that line is. There's also one at the bottom. The green line at the bottom is the bottom 200 period Bollinger Band. So these act as basically it's a normal distribution, a Gaussian curve. If and when we reach those Bollinger Bands, it's not exact because we've got a moving average, not a fixed average, but it indicates that we've reached an extreme level statistically. I'm not going into the mathematics, it's just basic first or second year statistics, but it indicates that there will be some resistance here. So I've added a little bit more to my short there. We've got one there at the channel top. Of course, now that we've broken out of this channel, it's no longer what I considered a sort of bear channel on the pound yen and the euro yen, or a bear flag, something like that. Now we've broken out through the top on both of them. So those have been negated. We were wrong. About 65% of the time, the flags will work out and the market will move in the favor of the, in this case, short direction. But 35% of the time it won't work, and in this case it hasn't on both of these, pound yen and euro yen. Nevertheless, we've sold at the top 200 period Bollinger Band. We'll see how that goes. I think we might see quite a sharp reversal on both of these pairs this week. I'm not trading the dollar yen currently. I'm trading the other majors, or I have been, the euro and the pound, not the dollar yen. And I think the dollar yen, because it's been traveling sideways for such a long time, it looks, actually, let's pull that up quickly. I'm actually considering a new trade on this at some point. I'm just got to make sure I get the timing right. But this is the dollar yen. Let's quickly pull this one up. And really, I'm bearish on this too. And we're forming this bearish topping pattern for sure. It's maybe not a head and shoulders, it's something more like a crown. The yen pairs, all the yen crosses love these crowning patterns. The Aussie yen, the CAD yen, the pound yen, the euro yen, the dollar yen, all the yen pairs love these crowning patterns at the top. That looks like what we've got going on here. And this does look like, in comparison to the euro yen and the pound yen, which don't anymore, this does look like a bear flag. The reason that the euro yen and the pound yen are going up is because the dollar has weakened, and those have moved up, but the dollar yen has moved sideways, and therefore that strength has crept into the euro yen and the pound yen. So this should start moving down soon, and we could put a little channel here on this sort of bull flag and see where the top of the flag might be and where the bottom might be. Well, we know where the bottom is. But if we do push up a little bit further, notice at the top of this flag, if it is or going to turn out to be a flag, remember the yen in these crowning formations, the definition or the description of a crowning formation is that you get these zigzaggy rallies up to form the spiky tops of the crown. And so we probably get another one. We could see another big rally all the way up to the top of the channel, the Fibonacci level, the 200-period moving average, or the channel center line, and this fib where we are now. So any of these areas are potential parts for the dollar yen to rally back up into. Alternatively, this will collapse down. At some point, I'd like to get short rather closer to 150 than where we are currently at 146. So that's my plan on the dollar yen, but once that starts moving down, if it does, I think it will, that'll drag the euro yen and the pound yen along with it down as well. Okay, folks. All right, a lot of questions. It's very, very difficult to get to all of them, but I'll try my best to go through. And I'm going to have to finish a little bit earlier today in about 10 minutes time because I've got another meeting to go to. Are you going to add more positions? Santo, thank you for your question. Are you going to add more positions to NATGAS if it's going to break up? Not yet, Santo. I might consider it. I don't have any plans to do that just yet, but if it starts looking better and better, and I have a chance, I might add some more on. Fariba, I don't, my position sizing is irrelevant really to, apart from in my private group, I try to give indication of my position sizes for every single trade I take. But if you're just following me on YouTube or here or there or wherever, I can't give you all my position size, when I'm going to add, how much position. And people always ask me, how much are you risking on a trade? That's my business. You risk what you think is appropriate for you, and you trade what you think is appropriate for you to trade. Don't copy me. Don't copy my risk. Don't copy my trades. Make your own mind up. That's why you're here, not to be a copycat. I'm not talking to you specifically about that question in general. So that's not against you at all, Santo. German 30, Fariba. All right, let's look at the German 30. Thank you for the question. Harley, stop it. German 30. Right, we're short on the German 30, or are we? Let's have a look. What have we been... Oh, sorry. I'm confusing myself with my own charts. We're not short on the German 30, we're long. Right, so German 30. This is, and once again, I talked about this in extensia in yesterday's live stream. So if you'd like to catch up on this a little bit in more detail, go back to yesterday's live stream and have a look at what I said. But basically, I think we could get up to one of these two levels, the top of the channel, or even higher up towards the 78.6% fib extension and the top 200-period Bollinger Band, the red skinny line at the top here. Let me reset the scale and show you what we've been doing up until now. We've basically been quite long and short on both directions on the German 30. We've traded within this channel for over 3 years, and that gives us a great trading opportunity to identify key levels, to trade against the channel top or the channel center line and the moving averages, which we've done. So we sold at the top of the channel. We sold previously at the top of the channel. We got that huge move down with the Liberation Day. We were fortunate, and I can only blame it on luck, not on skill. But if you happen to be short when something like that happens, well, good luck to you, well done. But it's not because you were skillful, it's because Donald Trump said something or did something or attacked someone. So we were just lucky on there. But these are more technical plays. We sold at the top of the channel. We got out at the 50-period moving average. We took profit there. And then we immediately bought and got out at the 20-period moving average, back up at the top of the rally. Let me just show you. So if I can zoom in. Why is this not scale price chart only? Auto. There we go. Okay. So yeah, so that's where we are. So we sold there. I'm just going to repeat what we did. Got out there, took profit, bought there, got out at the 20-period moving average. That was our last trade until recently. And then we've now just got long. So we got long at around 24,000. And my target, bouncing off the 20 and the 50, beautifully. This is a day chart on the German 30. And my target, very, very simply, is back to the top of the channel again. Until something stops working, why change it? So we're getting back to the top of the channel, I hope. That's at around 25,000, maybe slightly above. I wouldn't be surprised if we poked up through the top of the channel and then fell back in again. And I also wouldn't be surprised if we poked up through the top of the channel and carried on going all the way up to the 78.6% fib at 25,800. Once again, one of the 8 and 2 numbers, 25,800 or 25,000 or 25,200 or 24,800, which is actually the top of the channel, 24.8. So those are my targets. I don't know how far up towards we'll get towards them, if at all. And we need today to get a wiggle on, really. So we're long on that. And yeah, basically. Long on the NASDAQ too, by the way. All right, folks, there's a whole lot of questions. I'm just going to say hello. I'm going to try and have a look at what we've got. Got a small position bullish on NatGas. To be honest, I have no clue where it's going. I think I've covered NatGas quite a lot already. Edgar, Antonio, Mayoral, Manchera, Omkar, hello to you. Good morning to you. Nice to have you here. Inconspicuous Alien. What is a good trading platform that allows you to hedge? So I'm currently using NinjaTrader, and they don't allow it. And they also just denied me from having a second account. Ah, interesting. Why don't you, Inconspicuous Alien, I don't know which country you're in, and I wouldn't be able to advise, but I do know in the US and Canada and a couple of other countries, you're not allowed to have a hedging account. But there are some brokers, if you are in those countries, and I think IG is one of them, that allows hedging. I'm not sure. But you just have to look around. You can go and have a look at my FX book, which gives a list of brokers, hedging and non-hedging brokers, and you can have a look on that list of what's available in the US for you, if you are in the US. You can't sign up with Black Bull. There, I just read your next statement. Thank you. You can't sign up with Black Bull. They're in Australia, or New Zealand, rather. Gold or silver? I think both, David. Thank you for your question. Carl, nice to see you, mate. Could you kindly explain the technicals behind why we added to our NatGas position at 3.4? Why adding at 3.4 on NatGas yesterday? All right, let's have a look. So this is NatGas yesterday. I think I actually discussed this earlier. In fact, I've already covered this. We basically just broke back inside the channel with a big bullish move. I waited for the retrace, and bought on the dip back to the channel center line, and that was the addition. So our initial position on the channel center line, and our second position on the retrace to the channel center line. We did move up to retest the 50, as was pointed out earlier, and we're rejecting from there a little bit. Perhaps this is just a bull flag. Perhaps we'll have to hedge. I don't know. But the key level for right now is obviously this bottom at 3.26. As long as we're holding above there for now, we remain bullish. But if we break down below there, I think we're going to have to hedge for a target of $3. At $3, we'll take profit on the hedge position, add some longs, and hope for that to ride up. I'm not saying that $3 will hold. In fact, I think it will hold. I think $3 will hold. I think we'll possibly get there too. But I must point out that I have a pattern on this chart which is a little concerning, and I keep on pointing it out. and it's not something that concerns me overly because I'm not a big fan of head and shoulders patterns, and most of the time they don't work out, and they're very, very messy and difficult to trade and kind of meaningless in a way, unless you pick per chance and accurately and by luck maybe the top right-hand shoulder, which we actually did and sold at, but it's not because it was a right-hand shoulder. In any case, we're right down at the bottom now, and this right-hand shoulder is kind of spreading out way too much to the right-hand side. No longer looks like a right-hand shoulder, but it is starting to look like a bear flag. So it's looking a little bit bearish. If this is a head and shoulders, and if it is a bear flag, and I'll use the simplest example here, I'm going to draw a line from the top of this move down to the bottom. Bear with me, please. I'm going to take out the extensions. I'm going to change it to red. And that line I'm going to copy and duplicate, clone it, and drag it down to the top of the bull flag, which is where it would start, and project where this could get to. All right? So all I've done is I've taken that line. That's the A, B, and C is equal to A. And C takes us down to $2.50. That's based on a bear flag. If this is a head and shoulders, we could see $2.20 or $2.30, much lower than that. But in general, if this bear flag or head and shoulders works out, we may have to get down to $2.50 or $2.30 or $2.20. So keep that in mind. Don't be bullish on natural gas if we break $3. Trust me, you'll blow your account if you're not careful. These are the sorts of instances where people blow their accounts very, very quickly. Break down below $3, it could rush to $2.20, $2.30, $2.50 very, very quickly and leave you behind with your big floating loss and your blown account. You don't want that. Anyway, that all aside, I'm still long on natural gas. Target is $4 or the top of the channel, somewhere up into the $4.20 sort of region, where I'll be looking to sell for a move back down to $3. Or if we get to $3 first, I'll be hedged by then. I'll be looking to take profit on the short hedges, add to the long side, and ride from $3 all the way back up to $4. Sounds simple, but it never is. All right, let's carry on. Harley wants to trade too. Okay, AKA. Well, Harley's actually at my office door, staring at the floor where the crack meets the door. The door meets the floor. There's a very thin crack there. She's got her nose jammed to it, just in case my wife comes home and in case she misses the scent of my wife arriving home. It's just weird. Oh, NK. Oh, man. The very sad news is that Peanut died. I forgot to tell all of you. Peanut ate a pufferfish on the beach, we think. Or it may have been human feces riddled with something like trank or what we call in South Africa tik, T-I-K, which is meth, that she may have eaten on the beach as well. And she died. She ate it and she died within 20 minutes. And we were absolutely heartbroken. Not going to talk about that now. Yeah, horrible, horrible. AMD, I don't have time to get into that, Barbara, but I don't have those charts up here. I've been trading all night, folks. I'm a little tired today, as you may tell. I'm a little sleepless, so I've got to get some rest, and I think we'll finish off the stream pretty shortly. I'll be fresh tomorrow, though. We'll have a live stream every day this week. What do I think about gold? I'm your fan. Hi, Amit. Amit, nice to see you, mate. Can you look at corn? Says Amit. Yeah, let's look at corn quickly. Yeah, I like corn very much. I think this is a good play. I'm bullish on corn. There are my positions. There's the price. I like the way this is traded around this channel trend line and the breakout through the top. I like the volatility that occurred when trying to break down. I like the double bottom here. I like the sideways movement, the breakout through that channel. Even though we're moving sideways, it's okay. It's called a PIT, apparently. No, Harley, sit. A PIT, pullback in time. It's a new term I learned. You never stop learning. It's not a term I've ever heard before after 30 years of trading. but that's what we've got going on in corn, I think. So don't worry about it too much. I'm long. There's my positions. My targets are the red and the green lines initially above us. You can draw those lines on your own charts too. All right, so that was corn. Tanil stuck in a meeting. So, all right, you can rewind, Tanil, when you're out of your meeting. Cheerful pessimist, that's a nice oxymoron. I like that very much. If your trading account doesn't have enough to cover all your trades, is there a preference, or should you really wait until you're liquid enough to cover everything? Yeah, you should definitely wait until you're liquid enough to cover everything. Cheerful pessimist. Absolutely, make sure you're liquid enough. And if you can't trade everything, trade one or two things. And if you can't trade one or two things, don't trade anything. Wait until you're liquid enough. Or trade the micros. You can trade as much as you want. Trade with Oanda or Pepperstone or one of those brokers that allow you to trade micro contracts. Don't know exactly what a micro contract is, but it might be like $10 or $100 or something. I don't know. But there are plenty of brokers that offer that sort of thing. And if you want to practice, which is a really good idea, I don't recommend personally practicing with a demo account. It's a waste of time. It's ridiculous. And it doesn't teach you anything at all. So put some real money into it, but not a lot. Put, $100, $500, $1,000, $10 if that's all you've got. Doesn't really matter. With many of these brokers, you can trade tiny, tiny little accounts with real money and get used to trading, get used to money, get used to the way the markets move, etc. And there's no point in doing it with a demo account with fake money or a simulation account. It doesn't teach you anything at all whatsoever. And I'm going to stick to that thought and defend it because I don't believe it is helpful. Crude oil, Brent. Yeah, let's talk about oil. So oil, I'm short. Been short for a long time, about 3 years. We did get long on oil at the bottom here, at this double bottom, at the channel bottom, but we haven't only, was that the first time we actually reached? Yeah, that was the first time we got to the channel bottom since the channel was started in December 2023. So, and that was the first time we've been long on oil since then. So about 2 or 3 years, that was the only time we've been long on WTI. And we're still short. We got short at the top of the channel, and we got short here, and we're still short. My target is the bottom of the channel again, back down to 55 and these double bottom lows, and eventually a breakdown below that channel and much further down. And I've got a sort of a path drawn here, which I want to redraw. It's not going to look like that, but something like that. You can see where we started off. We got most of the way down there already. Let's reset the scale. You can see, so I'm going to draw, so we started off there. I drew this line in well before we got there. So we've got down here, we've got a little bit, we've gone a little bit too fast. What you can do with these lines as well, folks, is draw the lines in and try and mimic the angles that you see in general on the charts that you're trading. So I'm just going to eyeball this chart, all right, and try and draw this red line with similar sorts of angles. It doesn't have to be perfect or precise. We're not trying to be, don't try and be precise in your trading all the time. I think we could get down to the channel center line, the dotted line, and this order block down here. We're all basically almost down there already, but we're a bit ahead of time. So allow for us to catch up to the line that I've drawn in, and then maybe a bounce back up to the channel top again, but much lower at about 70, and then a continuation down back to the bottom of the channel. So I can immediately start to gauge where I'd be interested in buying or selling based on the movements of these charts. Now, I'm just going to zoom in one more time and try and get these angles roughly correct. And just sort of zoom out like that and see if these angles are right. I think they're okay, something like that. That one's a bit too steep, so let's pull that one aside for now, and let's maybe just make it a little bit more conservative, back down to the bottom there. So that's the sort of thing. Now you can see if that actually occurred, that would make a great deal of sense. It looks like the rest of the chart that's already happened, and it looks like we could carry on doing that into the future. Doesn't mean we're going to, but it's given me a framework to sort of hang my trade ideas upon as we move towards the right-hand side of the chart into this arrow. And I can now zoom in and see where we are. So we've got a little bit ahead of ourselves. We've gone down too fast, and we need what everyone's now, I love these sort of names that people come up with and these colloquialisms and newfangled terms. It's all just bollocks in my case, in my opinion. So, order blocks, fair value gaps, spring traps, all of that sort of thing. I put an article up on X about it a couple of days ago. Go and check that out. It's quite funny in a way. But pull back in time simply means that we got down there where we are currently too fast, too quickly. So we need to go sideways. That's what a pullback in time is. Maybe that's not quite accurate, but somewhere around down here. And so that could mean that we might have to faff around, bounce within, underneath this red line, all the way up until sort of another month's time, really, middle of September. We're now in the middle of middle of September. That's 2 months' time. So we could be in this, what would turn out and look eventually to be a very rangy market for the rest of the year. I said to my private group this morning, I expect energies, metals, perhaps even stocks, maybe even Bitcoin, and those sorts of names to be more or less range bound for the rest of this year, the next 6 months. And so you could imagine that on WTI, even if we do stick within this bearish channel, it will appear as if we're just moving sideways, because it's going to take some time. And in fact, by the time we get back to the top of the channel, it'll be almost the end of the year, and we'll still be at around $70. So don't rush things. Don't be too eager to, most traders lose money because they get too enthusiastic. They think the market's going to move much faster than they actually do. Markets are slow. When you get a massive move down like this on WTI, it's going to go sideways for about a month or two, because it just has to, because markets don't move in straight lines, and we have to more or less stick to the personality and the angles that each market forms. Now, every market has different angles, different personalities, different chart shapes, and that's why spending time at your charts is really important, so that you can learn those, get to know them, much like you get to learn the personality of a person that you are starting to get to know, and so on. Folks, have a great trading day. It's been a long session, I know, about 50 minutes, and we're looking fantastic. All of our trades are great. They're all looking wonderful. Natural gas pulling back a bit. That's probably the only little concern, although it is bouncing a wee bit right now. And everything else is looking fantastic. And I think we're in for a really profitable week. We've had a really good run, and I'm hoping that this will continue. I don't think this year, the rest of this year, is going to be easy, though. So be very, very careful. Markets can do funny things in these sideways moves, and sometimes it's a bit out of control, even though it's just moving sideways. If you're ever in doubt, if your account's in peril, if you don't know what to do, if you think your trading is junk or rubbish or not good enough, or it doesn't meet your needs, or if you need more skills, click on the link below, join my private trading group. There's a 33% discount until midnight tonight. After that, it's over.